Hello and welcome to the Wednesday, December 4th, 2019 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we're talking a little bit more about Elon Musk's trial. We have a little bit of news from Electrek on some internal emails, also from Elon. And then we have news across the vehicle suite on Model X, Model 3, and Model Y. Tesla stock on the day today did finish down 0.9% to $333.03. That compared to the NASDAQ up 0.5%. We did have a price target upgrade today from Citigroup that I wanted to touch on briefly. Though they were starting from a pretty low base of $191 with their previous price target, they've increased that to $222, so well below the current price, and they maintain their sell/high risk rating. In the note, they said, quote, "Though Tesla shares have underperformed this year, the recent rally seems overdone in our view, leaving the risk-reward skewed negatively," end quote. Also adding that their $222 price target balances, quote, "strong brand and secular exposures with the risks from operating execution, incoming competition, and balance sheet positioning," end quote. I wasn't fully clear on what he meant by secular exposures there, so I kind of looked into that a little bit more, and Investopedia had some more information on how that word is generally used. And they say, quote, "When applying the term to the stock market, a secular market is the market's overarching trend or direction for 5 years or more," end quote. So he's basically acknowledging a strong brand that is well positioned for the long-term trend for the market, but apparently feels those benefits are outweighed by the usual suspects of risk, execution, competition, and the balance sheet. Also layering in some demand concerns, saying that the story remains mixed and there is no quote-unquote convincing evidence of strong Model Y demand, which I guess is fair enough. There's no real statistical evidence. But I feel like that's kind of like worrying about the demand for a larger iPhone the first time one of those came out. It seems fairly obvious without the need for convincing evidence. I mean, you have to have some ability to analyze things and come to your own conclusions if you're going to be a business analyst. So that is my point of view, but to make the counterpoint to that, we can get a little bit of data from the search interest in Model Y compared to Model 3. Using Google Trends, we can look at an index of search interest since the beginning of 2017, which is, of course, the year the Model 3 first began production. So if we look at the search terms Model 3 and Model Y, the way the indexing works is that the highest search volume in any given week for either of these terms will index at 100. So relative to that peak interest, which happened at the time of the Model Y unveiling for the search term Model Y, the Model Y actually indexes over the last 4 weeks at an average of 9, meaning about 9% of the volume that it received during that peak week, whereas the Model 3 indexes at 39 over the last 4 weeks. So Model 3 being searched for about 4 times as much as Model Y at this stage. Now, of course, the Model Y isn't out, so that totally makes sense. So I think a more relevant comparison would be to look at the search volume for Model 3, roughly 3 to 4 months prior to the initial deliveries of Model 3s, which happened in July of 2017. So if we look at search interest, again on this same index, for March or April of 2017, we find that search interest for Model 3, 4 months out, indexed at around an 18 on average, and 3 months out, indexed around a 20 on average. So either way, about 2 times what we're seeing now in terms of Model Y search interest. So even with that more relevant comparison, the Model 3 search interest for a similar period of time was higher than what we're seeing right now for Model Y. I should also mention that these are all US-only numbers. So you could interpret this as a sign of less interest in Model Y than Model 3, or what my perspective happens to be is you could understand that the Model 3 was just a much more monumental event, being really the first quote-unquote affordable Tesla, and benefiting from all the hype and media attention and even attention from Tesla that warranted. For the Model Y, we almost have the exact opposite situation. And as we all know, that is very intentional. Tesla is strategically underplaying the Model Y at this point, so as to not cannibalize sales from their other vehicles that they actually can produce today, and also to avoid creating too much demand that they cannot fulfill as production ramps up. Anyway, probably spent too long on this topic, but if this is sort of the viewpoint of at least a portion of analysts or investors out there, there should be plenty of room for Tesla to surprise that group in 2020. All right, so let's move on to a quick update on the Unsworth versus Musk trial. Elon was back in the courtroom today testifying again, and we appear to have made it through another testimony without anything earth-shattering happening. I've been pleasantly surprised with the lack of media attention that this has received. I thought this would kind of be all over the place, and most places have had articles about it. It just doesn't seem to be really getting all that much traction, which is of course a good thing because it means that nothing particularly noteworthy is happening. That's despite Elon having to testify for about 6 hours between yesterday and today combined. I think he is finished now. I haven't been able to find confirmation of that, but Unsworth did take a stand this afternoon. So I'm hopeful that they've now moved on, but we'll obviously continue to keep an eye on this throughout the rest of the week. Full disclosure, now that we do seem to be through some of this, which I viewed as a short-term risk, I did add a short-term bullish position around the end of the day today. That's based on the thesis that I've sort of had since the Cybertruck unveiling, that the reaction to that was overdone. And then also I think Q4 is going to be a strong quarter. I think people are going to start to get more excited about the possibilities of that as we head through the end of the month. So obviously never any advice, but those are the actions I'm taking right now. And it is a pretty small trade. Next today is a report from Electrek. They claim to have seen an internal email from Elon Musk to Tesla employees with the subject of, quote, Tesla's 2 most critical priorities for December, end quote. Then from the body of the email, they shared only those 2 priorities, so I don't know if the email included anything else. But what Electrek shared was first, quote, the first is making sure all cars are delivered to their customers before end of year, end quote. And then, quote, the second, just as important, is that we immediately increase the rate of solar deployments by a significant degree, end quote. So I think on the first piece of it, no surprise there, Tesla always aims to clear as many of their orders as they can before the end of a quarter, especially when it comes to year end. But for solar deployments, which at this point is such a small part of the business to be their second largest priority for this quarter, is really interesting. Both of these would have tax credit influences, at least in the United States. Of course, for vehicles, we know the expiration of the federal tax credit happens at the end of the year. And then for solar, the federal tax credit there steps down from 30% to 26% at the end of the year. So that could be a factor in Elon really pushing for that on the solar side. But either way, both of these things are delivery related versus production related, which I think is a positive thing. It also indicates that Electrek still has their source, so there is some potential for us to see some other emails as we get closer to the end of the quarter. All right, so moving into some news on specific vehicles. The Model X today got a 5-star safety rating on the Euro NCAP. We talked in detail about the Model 3 results from the Euro NCAP when that came out. They give a really nice breakdown of the scoring, so we get a lot of good information from it. They use 4 main categories that they assign a percentage score to, higher being better. The categories are adult occupant, child occupant, vulnerable road users, so basically cyclists and pedestrians, things like that, and then safety assist, which is really about technology. So for adult occupant, the Model X got a 98% rating. That is tied for second out of all vehicles that the Euro NCAP has tested. That only trails the Mazda CX-30, which got a 99% on adult occupant safety. Really outstanding results there. The other outstanding category was the safety assist category, which should be no surprise. Got a 94% on safety assist, which was tied with the Model 3, and I'm sure would be tied with the Model S if they retested it today. But that's a full 12 percentage points, both for the X and the 3, above the second highest score in the safety assist category at 82%. So as we talked about when the Model 3 results came out, obviously Tesla's progress with autopilot has allowed them to develop extremely robust safety features that are not currently being matched by any other automaker. Where the Model X did not fare as well was for vulnerable road users, here only scoring a 72%. This category basically relates to how much impact there would be to a pedestrian in the case of an accident with the vehicle. So in my view, this is probably the least important category. If you're getting in an accident with a pedestrian or a cyclist, for example, it's probably going to be a bad situation regardless of the vehicle. So I would argue that the safety assist should actually be sort of incorporated into the scoring here, because the best way to minimize harm in those situations is to just completely avoid it in the first place, which safety assist will give you a much higher probability of doing. The last category then, which the Model X sort of has middling ratings on at an 81%, definitely not bad, would be for child occupant safety. However, if you look at the details here, the Model X actually performed extremely well for crash testing for child occupancy, with a 95% safety rating specifically on the crash tests. Where the safety rating was brought down for child occupancy was in relation to some lack of availability for latch points for child car seats. So the Euro NCAP failed the restraint system installation for the third row as well as the second row middle seat, as those apparently lacked the attachment points for that child seating. They look at 3 types of this. which I'm not familiar with these, but some of you may be. It's ISOFIX, iSize, and integrated CRS, with CRS there standing for child restraint system. So they failed the second row middle seat on that, and then the entire third row. I'll be honest, I'm a bit confused on this though, because from some reading that I've done, I thought that the third row did have latch points. So I don't know if it's just difference in specific types of attachment points there, or what the deal is with that. Maybe things have changed since those articles that I've read. I don't know. But whatever the case is, that is why the child occupancy rating is a little bit lower. But again, really good crash test performance, which I think is probably the most important component there. All right, so next up is some news on Model 3. The Model 3 yet again has won another Car of the Year award, this time in Switzerland. And not just the Car of the Year award, they actually have won 3 separate awards here. So the first one is the Swiss Car of the Year. That was determined by a 12-member jury, and the Model 3 got 23% of the vote. So 23% of 12 is obviously not a round number, so I think there must have been some weighted scoring here, guessing they sort of ranked vehicles. But the Model 3 got 23% of the vote. Second place was the BMW 3 Series, and that got about 14% of the vote of this jury. So another nice win for Tesla, but then even further than that, the Model 3 was also voted the favorite car of the Swiss. So that was a vote of 17,000 different readers across different publications, and the Model 3 won this with 7.9% of that total vote. Interestingly, the Audi e-tron finished in second place with 5.7% of the vote. I think that's a surprisingly high score from the e-tron. Lastly, the Model 3 also won the award for the greenest car in Switzerland, beating out a couple of other different EVs. So a really nice award season for the Model 3, especially from Switzerland. Next is a quick note on Model Y, and I'm not sure exactly when this was published, but it was brought to my attention on Twitter today that Consumer Reports has assigned the Model Y with a predicted reliability score of 2 out of 5. Obvious emphasis there on predicted, since they don't have any way of knowing the Model Y reliability yet. So I did reach out to Jake Fisher, the Consumer Reports Director of Auto Testing. He's been on the podcast a couple of times before, just to see if he had any comments on this. I said that my guess was that this would just be the overall score for Tesla across all models right now, dragged down by the Model X, which has a reliability score of 1. And he got back to me and said that the Model Y prediction is not only based on the Tesla brand average, but the fact that new models usually have some growing pains as production begins. So if you remember from our previous conversations, the Model Y, when it is eventually out, will be compared to the same model year for the other vehicles in its segment. And those may not necessarily be new vehicles, they may be iterative. So Consumer Reports industry-wide sees that reliability is lower in the case of a brand new vehicle than those more iterative vehicles. And that, alongside Tesla's brand performance, has an influence on the predicted reliability score here. Jake did mention that from his understanding, the Model Y should take a lot of the learnings from Model 3, which we recently saw improve in its reliability rating, which is a point that I would obviously agree with. So while it is a bit disappointing right now to see that predicted reliability score of a 2, hopefully once the Model Y starts to get out there, we'll see stronger than expected reliability, and that score can be upgraded relatively quickly. The nice thing is that shouldn't impact sales for quite some time. Tesla will be production constrained for a while, but I'm sure there is some lag time between when those ratings change around and when conversions for sales actually happen, because people may consider the vehicle, do some research on it, and if they see that, maybe they decide to rule it out. So regardless of production constraints, I think the sooner that can get flipped over, the better. So let's hope for good early quality from those initial Model Ys. The last thing is just a really quick note on Cybertruck. Somebody on Twitter asked Elon yesterday if he could add a flip stop to the tailgate of the Cybertruck to be able to transport longer items, to which Elon responded, yes. So if that was something that was important to you for the Cybertruck, obviously that adds a bit more utility and sounds like it's something that will make it to production. But that is it for today. As always, thank you for listening. I'd also encourage you to follow me on Twitter at Tesla Podcast. If you have feedback or questions, you can send those to me at tesladailypodcast@gmail.com. And if you want to support the podcast, you can learn more about doing that at patreon.com/TeslaDailyPodcast. Don't forget to subscribe, and I'll see you tomorrow for the Thursday, December 5th episode of Tesla Daily. Thank you.